and the yuan is devaluing principally against gold. This is the scale of that liquidity injection. You can see that the People's Bank of China, the central bank there, has injected this is a rolling 6-month change, something like 6 trillion yuan into markets on a 6-month rolling basis. In fact, over the last 12 months, that adds up to, or scales up to, about 7 to 8 trillion, and that is equivalent to about $1 trillion US dollars. Given the comparison between China now and America in the GFC, America put in about 2.5 trillion to bail out the system then. China will have to do probably the equivalent. So you're looking at something like at least the same again of monetary injection by China. What is the vent for that? It's, as I said, it's rising asset prices. One of the things that I think China will definitely want to do is to get the level of residential real estate prices up, which have been on the doldrums, because that really is, Chinese people's long-term pension funds, and that will need to be underpinned. And you can see here the devaluation of the yuan. Now, probably as we speak, this is out of date because the gold price keeps going up in yuan and dollar terms. But I think it's China driving the world gold market, not anyone else. And China is buying gold aggressively. We're told they bought 700 tons, at least 700 tons last year. They produced themselves about 375 tons of gold. So they're accumulating gold at something like 1,000 tons a year. Estimates would suggest that China has probably topside 5,000 ounces, maybe as little as 3, but somewhere between 3 and 5, we don't know. America officially has 8,000 ounces. And therefore, at this rate, within 3-4 years, China is going to surpass America's gold stock. That, I think, is a psychological fact or of import. And this basically says that China's actions are pushing the gold market higher. Why does China want this? Because I think China is backing its currency with gold to some extent. It's not a gold standard, but it's a gold content system. And that is very much in their interests. And it makes the Chinese yuan a lot more attractive to trade with, particularly if you're another commodity producer, be it a Brazil or a Saudi, because you're probably quite happy to have your goods priced in yuan if there's that gold backing, because you know that the yuan is going to be underpinned. So effectively what they're doing is they're doing gold for oil or gold for commodity swaps with China under this regime. So this is the mechanism that we've got. China is in a very different situation. China is pumping liquidity. America is stumbling or stuttering in terms of liquidity. We've got to see the color of the Fed's eyes here as to what they're really doing. I think that they've made an error. I think they're going to be slow to address that error just by simple institutional inertia. And I think we've all got to be very alert, being investors in risk assets, about what the near term looks like.